OCBC and UOB are reporting better than expected second quarter earnings, and this round up a positive first half for all three local banks. But analysts anticipate a more challenging second half as interest rates are expected to decline. Michelle Teo breaks down the numbers.
A slower Singapore economy has not dampened the growth engines of its three local banks. Net profit rose across the board, buoyed by strong loans and a higher net interest income, the interest earned from loans. UOB's net profit for the second quarter jumped 8% to nearly 1.17 billion, while OCBC's net profit for the second quarter is up 1% to 1.2 billion. OCBC says its healthy capital position allows it to navigate the challenging environment as it diversifies its key markets.
Outside of Singapore, Malaysia, Indonesia is expected to continue to report economic growth of between 4 to 5%, and China may be close to 6% as well. These continue to be fairly good economic growth, of which we, because of our network, because of our presence over there, we should be able to capitalize upon.
While all three banks improved their net interest margins quarter on quarter, DBS and OCBC were able to tap the favorable interest rate environment to lift their net interest margins year on year, but not UOB. Its NIM fell by 2 basis points compared to a year ago due to a higher cost of funds.
In the second quarter, we started seeing improvement in NIM as a result of mortgage repricing and lower cost of funds. We expect to maintain NIM around similar level for 2019.
The bank added that the impact of the recent US Federal Reserve's rate cut is unlikely to be felt until next year. Despite strong performances from all three local banks, analysts say that a slowing global growth as well as a declining interest rate environment could adversely impact the outlook for the banking sector in the second half of this year. However, one analyst says that despite the challenging external environment, the three banks maintain attractive dividend yields, with UOB and OCBC paying higher dividends for this quarter.
For the three Singapore banks, they are underpinned by strong capital ratios where it is above the regulatory minimum, so that puts them in a very safe place. They have stable asset base and they are still growing their asset under management. So that is really positive for the banks.
Shares of all three banks closed lower, with DBS at 0.98% lower, UOB falling 1.06% and OCBC sliding 1.84%.